Are you rich? Well, lucky you, aren't you? Talking property here and land tax, and we're in Victoria. So here's the power of ringing your accountant before you make that property purchase. And I know we're talking about the super rich here, lucky them, but they're a good example of pointing something out for land tax. So we're talking here about a client who has bought 3 properties, and we're trying to get their structure 100% right for land tax. So as I've mentioned in previous times, you need to be buying properties in discretionary trusts if you've got a growing or decent sized small business for asset protection for you and your family. Has to be in a discretionary trust for investment. So here we are, we're talking land tax, and there's 3 properties here which our client owns, and we're talking the land value here, not the buildings on it, just the land value, and that's what land tax is assessed on. So here with the client, okay, they've got 3 properties, and if they put those 3 properties in multiple discretionary trusts, they're going to make a huge land tax saving here. So the first property, $800,000 in land, the land tax is $4,688. The second property they've bought the land is 1.2 million, and the land tax is 8,788. And finally, the third property there, the land is 1.5 million, and the land tax is 12,313. So the total land tax for this client is 25,709. And that is when they've set up 3 different trusts, 3 separate discretionary trusts. There's a lot of advantages for estate planning for those wealthy families as well when they've got more than a kid or 2. So think about that as well for the super rich. If, however, this client bought all 3 properties with 3.5 million worth of land in the one discretionary trust, keep it simple, stupid they've used, which is very, very dumb. Got to keep it complex when we're talking tax and trusts. One trust, 3.5 million of land. This is their annual land tax bill here in Victoria. 36,225 for one trust, 25,709 for multiple trusts. It's a $10,516 saving per year on land tax for this client. A couple of grand in accounting fees, and they're still about 8 grand better off year upon year upon year. I know it's for the filthy rich. It's not most of us, but if you get the property structure right, you can save on tax. Ring your accountant for property investment structures, because they're going to be the key to saving on tax. There's something for you to have a think about. See ya.